Friends, this is Shondipon here again. Now, in this video, I will try to make you understand one very critical thing, and that is why you will always make better returns in mutual funds than in stock market. And now, let me begin this journey because many people may have find this really difficult. So, let's come to the basics. What happens in SIP? How do we invest in, let's say, SIP? Because I am talking about mutual funds, I will draw two conclusions. See, one will be mutual fund and another will be stock market, because stocks have got some specific, stocks are very specific. In stock market you buy maybe 5 stocks, 10 stocks, or 15 or 20. I'm taking these numbers. Mutual funds, you are buying either maybe 50 stocks or 60 stocks or 100 stocks even. You don't know that, because in mutual fund these numbers are fixed by mutual fund managers, and they are rotating the funds. They are rotating your funds in different manners. I'm talking about equity mutual funds over here. I will may not be talking about the debt mutual funds, because over here I'm talking about the stocks, because stocks is directly the equity. They are related to the equity. In stock market you have got these 5 stocks. Now see, out of these 5 stocks, if 3 can give you good returns and 2 doesn't work, it becomes difficult. It will be wonderful, but what is the allocation of the stock market? Let's say, what is your allocation in stock market? Why the allocation is so high? Because in India, if we see, the price of one stock may go up to 2000, 3000, 4000, 5000. We can get stocks up to 36,000, 37,000, and even the MRF, what we can say, the MRF, that stock, I'm not recommending this stock, but this stock I'm saying, this stock costs more than 1 lakh. So we cannot buy fractional numbers in stocks. This is a big problem, why we cannot buy certain good stocks which we feel that we want to buy that, but we cannot buy because of the value of the stock, or let's say the money. So you need big capital. This is something which I want to make it clear, that for stocks we need huge capital. You really need huge capital. If someone is say telling you that you don't need capital, you can start off with 500 rupees, this is wrong. You have to start with 5 lakhs. This is something, a number with which you can start. Why am I telling this? Because I am experiencing this. I want more and more capital in stock market. In stock market you need capital influx. And why I am saying that, let's take an example. This will give you better understanding. Let's take a stock and let's say it's a journey. Let's take the journey of the stock. This is the journey of the stock. Now think about this. You are very much inclined to the stock. You know that this stock is really giving you good return, and you have total understanding of the stock, why this stock is going up, why this stock is falling down. I will just change the color so that you can understand. If you are buying, you know that you will be buying over here. So you have bought here, you may have bought over here, you may have bought over here, but if you have to buy it in every interval, now you will not be buying over here. Over here you will not be buying, because you know the clear resistance and support. You know this is at all time high, so you will not be buying it. You will be buying in a zone. Let's take a EMA. Let's take that EMA is like this. Okay, this is, let's say, 200 days EMA, exponential moving average. Let's say this is 200 EMA. So you need a huge capital to start off with one stock. I am talking about one stock. Maybe you will diversify. So for diversification you need more money. This money is needed more in stock market. This is the sole reason. Now I will tell you why in mutual funds you get better returns. In mutual funds, we will have to understand how this mutual fund thing works. In MF, you are allotted units. So units in NAV. So NAV is allotted, net asset value. So this NAV increases. When this NAV increases, your portfolio also increases, and if it goes down, vice versa. So this is something. But for starting off a mutual fund, how much fund do you need? Because you are not doing the job in MF. The mutual fund manager is doing all your jobs. So over here you only need rupees 1000 maybe. This is the prominent amount with which you can start an SIP, and most of the people do in SIP format, because SIP gives you averaging. What is averaging? I will let you know, because many people will tell what is this averaging and all those kind of things. Well, in earlier example we were taking a stock. Okay, so let's draw a different kind of stock. Well, I think this is a bit odd. Let's take that this is the journey of a stock. Okay, now if you are a sorry for the let's take this as a stock, and now let us take an example. You are buying every month you are buying. So in every intervals you are actually buying. You are buying it when it is over here, over here, over here, everywhere. You are buying at every intervals. This is actually averaging the cost. This is something which is you have to understand. So you are buying at 2 rupees, maybe at 4 or rupees, at 6. Also you are buying it at 1 rupee too, if it is going down, and then you are averaging it. This becomes a very important tool. So we will come to this point now. Many people may say that if this is the case, can't we do it with stocks? What is the problem with stocks? If we do SIP in stocks, wouldn't it be good? Now I am telling you a very interesting and important, I am asking you a very important question. If you have to enter into stock market, if you want to earn better returns than mutual fund, you want this, you want better returns over here in stocks and not in mutual funds. If you are wanting this and you want to do SIP in stocks, then what is the point of all your studies that you have done? Think about this. If this is what it is, if you want to invest in stocks only and you want SIP, both of this, it is better to be in mutual fund, because that is what it is you are doing. You may get that in mutual fund portfolio, the stocks that you are holding, maybe you are holding a stock portfolio, the stocks you are holding, all the stocks are there in mutual fund, but your return is lesser than that of mutual fund. Why? Because you are holding it at certain levels where you don't know whether it is the support, the crucial support, or it's the resistance, whether it will break out or whether it will break down. Maybe you are holding certain leader companies where these stocks have not moved. Let's take certain examples so that you can get it. We will take the example of Nifty 50, because this is where all the game begins. This is where all the top 50 companies are there according to market cap. So in Nifty 50 there are many stocks which haven't given an up move. So if I take examples, you will get big names. You will get big names which haven't moved in last 5 years, because I will take 5 years. Many people have started their journey after this COVID thing or from the COVID thing, and as I will take this case, so I will just name certain stocks which haven't given that much up move, like HDFC Bank, all the private banks. I will in Kotak is there. You will see these banks have not taken any kind of up move. HUL is a stock which haven't given any run up, and there are also, let's say, Asian Paints. This hasn't given much up move. Then we have got Bajaj Finance. This has also not given that up move. Now there have been certain stocks which have given good rally in this sector too, in this Nifty 52, the PSU stocks. If you go and see the PSU stocks, this this rally of the Nifty 50 has taken place because of the PSU stocks. If you see the Nifty 500, if you follow the Nifty 500, you will see that. So most of the people had this narrative that PSU stocks will not perform, but in this 5 years, if you see, the PSU stocks have given better returns than the private companies. This is the problem. This is the industry wide problem which is there. So you are holding good stocks which have given good returns in 5 years. Then how does the mutual fund players are doing better than you? Because they are holding many stocks. They are holding maybe 100 stocks, and in these 100 stocks they are having hedge. Let's say hedge. What are hedges? Now I'm telling certain important things so that you can understand what is hedge. Hedge means they are having gold, they are having large cap companies. Let's take Reliance. They are having maybe Reliance, they are having HDFC Bank. So they are big players. What happens? They don't fall that much. They are having cash positions too. So if Nifty 50 is going up, then they are moving smaller. If Nifty 50 is going down, let's say this is the fall, they are also going down very low. But ultimately the result has been that these stocks haven't given great up move. That has been a core reason. Reliance have given a up move. If this is what is I'm talking about. This is something which I have seen. This is something which I have seen in the last 5 years, and that is why I am saying Reliance have given an up move. It has given from the 2300 level, it has moved to 2900 level, and now it is consolidating again. For such a big huge market cap to move, you have to understand these things. So it takes time for large cap players to move, but still they are at good discount at this moment. Then why these players are not moving? I have named the stocks. Why aren't they moving? Because there has been issues related to mergers, there have been issues related to their profitability, there have been issues related to the industry itself. That is why. Now if a company is giving, let's take certain names so that you can get that which companies have given good up move. ITC have given good up move. If you see, it has given 100% up move, more than 100%. Titan has given a good up move. These are the companies which are there in Nifty 50. SBI has given a good up move. If we see the HPCL and BPCL, I am not having over name. So these companies have given good up move in the previous 5 years. And even gold, if we consider gold has been the amount of gold price have doubled. It has doubled in the last 5 years. So it has also provided a good amount of hedge for many people, also for the mutual fund managers too, because they delve in cash too. They keep aside certain money so that they can hedge their portfolio, they can protect your portfolio. Hedging means protecting your portfolio, we can say that. So what will be the next up move? There will be an up move of those companies which have been down at this point. So and your portfolio, I will say the portfolio that we all have, I mean maximum people own stocks. I mean there are results, you can see people own HDFC Bank. I'm taking this name so that you can get, because this is what it is. They are having Asian Paints, they are having Bajaj Finance. So these haven't given up move. Now this is at loss, this is also at loss, this is also at loss. This is a consumer company, and the crude oil has actually played a big mess over here. This is the reason why it has not played. Bajaj, it has not played because there has been a narrative which is playing that Jio Financial will be coming into the market and it will take away the market from it. HDFC Bank, because of the merger and the size it has created. So these are the issues, and these are temporary issues. Every company goes through bad phases, and this is why you don't make money, because at this point when these good companies are having good, they are at discounted level, you are not investing in at this point. Maybe you are seeing a gap down and there is a 10% down, 10% down. Let's take Kotak, because Kotak has actually gone down. So Kotak given 10% down in one day. In one day it has gone down by 10%. Now will you buy this? Do you have conviction in this stock? This is the most crucial question that you should ask yourself. If you are over here just to earn money from the stocks, then that is not how you should approach toward the stock. When you are owning stocks, you are not owning their shares, you are owning companies. There should be an ownership. What does an owner do? If you are the owner of these companies, will you just run away from there? You will not run away, you will be beside them. So it's about the partnership with these companies that you are doing. This is not how we approach. What we approach, we want just money, we want quick money, and that is how we lose money. So that is all about the video. If you think that there are more to add to this video, you can just comment down, and if I can make any more insightful videos about stock markets, mutual funds, investments, insurances, and many other topics which are there today in banking also, because this is also something which is related to finance. I am related to in the finance background, and therefore I am doing this video. I have got quite a bit of knowledge which I have actually gained from my own personal studies, and from there only I am telling you these numbers. I have only taken the names in the Nifty 50. So you think there are companies in Nifty Next 50. In Nifty Next 50 we have got some great companies, but we don't know whether it will move up or down, and you have to take bets from there too, because they are also large cap companies. There are also Nifty 100, there is Nifty 500. There are huge. This is where the chaos is. We see a company moving up and we buy it. We see a company moving down, we sell it. The opposite should be there, and that is something which many people say, but we don't have got that guts. What we need is the risk taking ability. When you are investing into stock market, you should have the risk taking ability. Take risk, take concentrated risk. Concentrated. If you don't take concentrated risk, you will never make good fortune, because you are over here to make fortune too. Yes, these companies will move up, but let's take that if you have got a portfolio where there are 5 companies and another stock there are 10 companies. Over here the probability of moving up is higher than this. Maybe I can be wrong, but because this portfolio is concentrated, this can give you better returns than this one. Yes, definitely you will have to choose some good stocks over here, and your study should also go up, but this is also good. That is all about your research, your development, how you are doing, and at which price level, because the price is most important, at which price level you are buying. So all these are study related, and this is how you study about stocks. In stock market you study, and then you should invest your money, or whether you should buy the stocks. Mutual fund, you don't have to think anything, you just sleep and give your money to the mutual fund manager. They are there because over here in mutual funds what happens, there is competition amongst the MFs. There is a huge competition. If someone is giving, let's say this is a huge competition, let's say if someone is giving 15% return, the another mutual fund company will have to give you 18% return, so that they can lure you. This is something which is the truth. So there is a competition, and therefore they will always be accountable, they will be held accountable for the money, though there is a market risk definitely, but this is what it is. So I think you can get my viewpoint, and accordingly I think the video has also gone up high. This is what it happens. This is what it happens when I make videos, because I try to give more insight into this mutual funds and thing. In MF what we do is SIP, and maybe it can be 10,000, 10k or 5k, but in stock market one stock amounts to 7,000, 7k maybe, or maybe 5k. So think, if you have to average up or average down, you will have to buy more. So the amount going into stocks is more, and in mutual fund portfolio it is less. That is why we get lesser return in stock market portfolio and great return in mutual fund portfolio. So I will say, just wait for another 5 years, another 10 years, and stick to this company, stick to the companies which you have bought. Just stick to it, because you know their business in and out, you know the problems, whether it is temporary or permanent. You will be frustrated by these companies, you will think, why have I bought all these things. This is the thing which you will have. You will have self doubt, and when you will have this self doubt, then only what will happen? You will sell. You will sell the stocks, and then the stocks price will move up. This is what it happens. This is the truth, the harsh truth. So learn. If you want to learn more, stay tuned to this channel. I will try to give more videos on this. I will try to make more videos on this, and definitely I will make videos on banking too. But this is something which I also delve in, and therefore I will make my videos more oriented to this kind of finance problems too, so that you can get more insight into stock markets, mutual funds, the insurance, and all this kind of things. I have already said about it. Bye bye, take care, see you in the next video.